Is now a great buying opportunity for his industry, which is tech, or is AP, Adam Parker, correct?
Well, you know, I hate to argue with Adam at any time, but I am going to argue with him a bit here. I think that it depends on the type of tech. I actually don't disagree with what Adam just said right at the end of his comment in terms of companies that aren't generating a lot of cash flow here. I completely agree. I don't think it's the time to go out on a limb and buy a bunch of technology companies or, you know, even tech adjacent, healthcare, communication services, any of those industries where you're relying on the fact that you have 5 to 10 years in the future of, you know, double-digit revenue growth, but you're not generating a lot of cash and or profitability right now. The thing that I would say, Scott, is I'm doing a lot of work right now looking at enterprise spending, reading calls, reading reports, reading surveys, and major enterprises, not small and medium-sized businesses, but large enterprises are not seeing a decline in enterprise spending right now. So I think if you're interested in tech, you really need to look at where are those customers coming from and what is the likelihood that they're not going to continue to order. That technology is what you need to be focused on now. I wouldn't be taking a flyer on anything that's not profitable or, as Adam said, you know, throwing off a ton of free cash flow in this environment.
See, now the retort to that, I suppose, could be, well, as the Fed chairman told you, a lot of what they've done to this point and will continue to do takes a long time to get through the system. Shannon's right. There has not been a big drop-off in enterprise spending at all. And CFOs, CEOs who come on the network from major technology firms have said as much.
Yeah, she didn't say anything I disagree with, actually. You know, I think it's all about what kind of tech you own. If you're trying to beat the S&P 500 on the long side, right, you still have to own 25% of your portfolio in tech, right? If you're a little bit underweight, it's in the low 20s. So I can be way overweight energy and still own way less energy than I do tech. And you're going to want to own some tech names. But I think what the key is going to be, do they generate cash flow? Do they have above GDP long-term growth? Or is a ton of the value in the terminal value? The problem is, Scott, 43% of all software companies that do $500 million or more in revenue lose money. All right. Now, you and I might not be the smartest guys in the world, but if we started a software company, we're making money with $500 million in revenue, signing in blood. So I think those are the businesses I want to avoid, whereas the ones that maybe Shannon are talking about, you know, probably have, you know, above average growth, pretty good cash flow characteristics, and probably have been reset meaningfully this year. So we're probably in agreement.
Okay, Malcolm, yep.
Yeah, I would just add to that a little bit of a caveat to what Shannon's saying, in the sense that if we're now at a place where we're concerned about enterprise contracts becoming a bit of a problem, it kind of makes the case for why mega cap tech is the safer place to be in the tech trade, or the least dirty sock in the hamper, if you will, simply because the larger companies like a Microsoft, a Google, for example, they've also got federal contracts that buffer some of these downturns in the market and that enterprise spending that ebbs and flows a little bit depending on where the markets are, where federal contracts are for, you know, 5 years, decades long sometimes, and they don't really have a lot of wavering in there.
So you've been fairly cautious, Malcolm, in our last conversations. I mean, I think you were on a day that Tom Lee was on with us, and you kind of called him out right to his face. Are you still cautious? I'm curious as to what you make of what Kashkari says, just to rekindle that for people who may have missed that or you didn't hear it yourself. He was happy to see how Chair Powell's speech was received. He says, quote, "People now understand the seriousness of our commitment to getting inflation back down to 2%. This is a guy who is known as one of the most dovish people on the Fed, sounding like he's got like 5 hawk suits on.